Here are 3 things you need to know right now. Meme madness is back on Wall Street. Shares of AMC, Bed Bath & Beyond, and GameStop are catching more attention this morning after big spikes yesterday. These meme tickers were among Fidelity's most actively traded stocks yesterday. And guys, some interesting action. I'm having deja vu back to early 2021. Whether these folks, whether the meme stock crowd is just hunkered down in their homes, enjoying the air conditioning in this hot weather and trading stocks, or trying to figure out ways to beat inflation via stock trading, unclear. But again, these stocks are in focus. We should know Bed Bath & Beyond was caught a pretty vicious downgrade to underperform over at Baird this morning, calling the move frenzied, but still all these names in focus, and you can see some of those most active names on our screen right now. Yeah, it begs the question of, will the run kind of start to fizzle out? We've already seen that in one name, particularly that had kind of kicked off this fanfare, if you will, around AMTD particularly. That's been starting to pull back a little here. But then you look at some of the most recent meme stock names, some of the same ones that we've seen back in 2021, AMC, GME as well. GME, GameStop, was up 20% Monday. AMC was up 8% Monday. Earlier in the day, it looked like they had about 2.5% in gains pre-market. But look at this now. We're seeing a move lower by about 2.6% pre-market. And look out for where there is short interest in some of these names too. Bed Bath & Beyond, that was a significant short interest name, had about 40% of its floated shares in short interest positions. And so that's something that the meme stock, or at least the Reddit retail investor, if you will, typically looks for in some of the targets.
Yeah, and try to actually force a short squeeze in some of these, meaning that the move upward can be exacerbated because people are forced to or choose to cover their shorts. It hasn't just been price action that's ticked up. It has been, and we were hinting at that by showing the Fidelity screen of most actively traded stocks. If you look at the trading volume over the past couple of days, we've seen some pretty incredible spikes in these names. AMC trading 132.8 million shares trading hands yesterday. If you look at the 3-month average, it's about 45. Bed Bath & Beyond, big jump, huge jump there as well, even larger relative to the 3-month average. GameStop not quite as active, but still seeing that activity. And again, we don't know what sort of the catalyst was for this, but I think what that bear note illustrates is this still persistent view that I don't think is necessarily the incorrect one, that you have a divorce from fundamentals when you have this level of trading activity. Not that these stocks are not necessarily worth buying. I'm not going to opine on that. But that the level, the magnitude of both the volume and price move sometimes gets divorced from the actual story of these companies. And it's, people sort of talking them up on various
Yeah,
boards.
we've seen Reddit chatter definitely pick up. But I got to give Baird analyst Justin Kleber, he's the one that is delivering that Bed Bath downgrade this morning. At least this is a Wall Street analyst paying attention to the retail community, because a lot of the street completely ignored this move, I would argue, when the meme stock trading popped in early 21. But to your point, Julie, fundamentals are still awful. Bed Bath & Beyond needs to raise cash, and they need it to very soon. GameStop under severe pressure, not a good second quarter. If anything positive, it came out of AMC. CEO Adam Aron, Chief Abe, came on our show yesterday saying he's looking to reduce debt significantly, also striking, I would say, an upbeat tone on the box office. At least that move I could somewhat justify.
And so with that move, and, I believe we have a clip of him as well and what he said yesterday on the show, but what he did point out was the change for some of the fundamentals. If we're going to talk about fundamentals, we have to think about where they're engaging with customers differently. For Bed Bath & Beyond, that has been dismal, and we've well chronicled that. But then additionally on the AMC side, where from Adam Aron's perspective, it's all about bringing back so many of those customers into those theater experiences, while at the same time not sacrificing a margin, because from what I had asked him yesterday during that conversation, it really does come down to how you operate that theater experience. And does it go more digital? Is it more seamless to the point where, in my experience, only had to talk to one employee on the way in? That's significant, as well as the fact that they want to drum up the investments in that popcorn experience, as well as some of the other capital expenditures that they may look to make in the future. I think that's a larger question. Where might they put some of that money to work?
And that one employee you talked to is probably making 30% more.
Exactly.
Aaron also told that. I thought that was pretty interesting.
Exactly.
It was interesting. But again, whether all that stuff is going on or not,
right,
is the stock worth around 25, where it's trading now? Was it worth 60 when it was trading at the peak of $60? And then you mentioned the sort of newer school or new entrants into the meme stock universe, if you will. And those are new entrants to the market. Some of these Chinese IPOs that are also Hong Kong listed or Hong Kong based, talking about the AMTDs and MEGLs of the world, Magic Empire.
Oh, yeah, what a name.
I mean, the stock is down now, but these things have been flying in recent days. And people don't even know anything about them.
No.
This could be short-lived. I'll just quickly add here, when we saw that meme stock, when all this erupted in early 2021, there were stimulus checks in play here. A lot of consumers had a lot more savings to put to work in the markets. It's a different environment. We've seen the savings rate come down significantly as consumers are battling inflation. So they might have less money to put in the market. So this move, this action, could only last for a few days, potentially.